Investing.com Thursday. Hello, Harrison. Yeah, it's a beautiful day. Had a pretty good month this week. How about you guys? Hugo, hello. Ren. Hi, Arena. Arena, are you enjoying the platform? Hugo, how are you? Sue's here. Brock, my trading warrior brother. Hello to India, Rajat Kar. So we start at the top of the hour. I got to get my mouth to work here. You know why? Royal, good morning. Rajesh, Sud here, everyone. My buddy Kevin, Charmaine, nice to meet you. Stephen. Okay, so everyone has to have an edge when they're trading. Do you know what your edge is? My edge is RSI. It's simple, but it's my edge. And it was a reason why when we rallied here, I didn't think the low was in because of this reading. So we've made a new low. This time we're not confirming the low. And perhaps we're going to work towards this blue line. Maybe it's a magnet. If we're going to work towards this red line, speed line, and people ask me, how do you draw your lines? And I say, I use my imagination. And, you know, you can too. So you find a couple of points for acceleration and you draw them, you'd be surprised how many times they work. And if you don't like the line, you could always erase it. So anyway, we're coming, you know, pretty close to the moment of truth in the S&Ps. Blake has been saying for a week or so that we're going to be heading for the 200-day. And that's around 3,100 down here, a little over 3,100. I have 32 demarked as a demarcation line here. But, you know, this is just another trade. And what I'd really like to talk to, okay, Gary, hello. Yeah, US dollar yen worked very well this week. It's empiric, which I'm not sure what it means, empiric. Anyway, what I really want to talk about is pretty excited about what's going to happen tomorrow. How about you guys? If you haven't signed up, and we're inviting everyone watching us today on investing.com to register free. And it's going to be a 3-day event starting tomorrow. And I mean, it's the who's who, our speaker lineup, a debate we have scheduled. Look at this lineup. CNBC, 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 CNBC. I mean, and all the major financial networks. This is just part of it. Here you go. Here's some more. Author of Market Wizards, one of the more well-known crypto guys out there in the world. Lynn Alden, gosh, you know, I missed an interview with her. I'll probably get to talk to her. I had to cancel her because of our last summit in April. Michael Guyad used to be on CNBC all the time. I've interviewed Michael before. And, you know, I'm really looking forward to talking to Jack. He has a new book out, so I have to get through it. So I do a decent interview with him. Shy Girl, Tracy's going to be there. Ashraf is great. Plus, you know, besides being compelling, he's got a great sense of humor. We have a good time. Mark Dow, everyone knows Mark Dow. Stephen Goldstein, he has a great rep. I've never talked to him before. So I think, and here's our last line, Daniel LaCale I've interviewed. This will be someone new for me to talk to, Axel. Looking forward to talking to him, and Chris from Pepperstone. I believe Chris is with Oh, MTI. Okay. Chris is with Pepperstone. Now that we have a relationship with them, I think I've tried to interview Chris. It's hard to line up interviews with people on the other side of the world because they have to be up. Right now, this is the middle of the night for them. And then we all know this guy. And I believe I've interviewed Brett. So look at this lineup, guys. What do you think? Yeah, Booth was with the Fed. Well, FACE will be starting later, and that'll be the beginning of it. And included in this is a big Bitcoin debate facilitated by one of Joe's, Abigail Doolittle from Bloomberg. This cartoon character will be interviewing a few people. Justine Underhill, she's a journalist, and the rest of the crew. Steve won't let anyone get away with anything. You could be sure of that. Stell and Joe will be there. So, live debate panel, bring your questions. Also take notes, because there's going to be so many pearls during these 3 days, you're going to forget it. Of course, you're going to have access to the recordings, but if you're there live, write down things that really strike you during it, and then you can go back to it. Okay. RSI works pretty well in a trending market, and I'll give you one example. Okay, so starts at 12 noon, that's 9 o'clock. And we'll be doing a FACE FACE webinar, and then roll right into the interviews with Danielle. Okay, so here's the lineup. End of day one. And then if you don't want to watch, college football on Saturday, it's not that great this year anyway with, COVID. So you guys really, the team worked very hard to put this together. All right, and it's free. We do a lot of things free for the good of the trading community. Mainly what we get out of it is, names for our database. But this is really going to be, I think it's one of the best events I've ever seen, on FinTwit. Okay. You'll have tough questions, Arena. I'm nervous. I hope you don't have one for me. I'm biting my nails. Okay, so before I turn it over to Blake, the question is, RSI works well in ranging markets, but not trending markets. And I don't use it just for divergence. So here's a trending market right here. In fact, I'm looking to already have a piece on, but do you see this right here? I forgot who asked the question. Normally, this costs you money for a consultation. This is from Zay. Okay, so you see this, Sa? You see the RSI? It's a confirmed high. So I do use it in trending markets because when markets are making new highs or lows and momentum's confirming it, it's telling me that this is not the high, which is important information for me because that tells me I should be buying a break looking for new highs. So that's just one example of how it works in trending markets as well. Okay, I hope that helps or at least opens your mind to RSI. I don't just use it for when it's overbought and oversold. It gives me messages when markets are confirming or diverging. That's really my edge. So, Okay, let's see, it's about 10 after. Talked about EG selling off this week, and that worked, right? Talked about the yen putting in an important low. It's running into resistance, but you had a pretty good week. Although the week's not over, it's a decent week and cleaned out all the bulls right here. So I don't have anything new I want to do right now. Crude has been stubborn. It, shook me out of my position when we spiked up here. It didn't hit my stop, but before the candle closed, it was like a completely blue candle. I got out losing 50 cents. I thought I'd save 50 cents because my stop was 41. Like Blake said yesterday, at the moment, it looked like the right decision. And then 15 minutes later, it looked like not the right decision. So, all of us, no one's perfect in this business. All right. But I still contend that the difference between pros and amateurs are that pros know how to lose, so they have money left to be right with. And I wasn't always a pro because I would blow out an account and then I couldn't trade until I was able to accumulate another war chest. So really, you have to learn how to manage your risk when you get in. Okay, so with that being said, just one more piece of business. Okay, Richard, you'll be there, 12 p.m. Yeah, it's a good idea not to lose money. So simultaneously, we have this going on, our twice a year promo where you get real good prices to become part of our trading family. Okay, well, there'll be a recording, Amira. You still have to register, yes, but you still have to register to have access to the recording. So you could do that. Oh, okay. All right, anyway, these are the offers. 2 for 1, 6 for the price of 4, and 12 for the price of 7, which is almost a 2 for 1 for a whole year. So expires the 28th. You have about 4 days to act and crack your piggy bank open for this. And that's it. I don't have much to say in the markets. I don't see things every day, and there were plenty of ideas up until today, and my week is pretty much done. Holding positions, cleaning up, and really invite people at investing.com to try us out today. Blake, good morning to you. You excited about the weekend here coming up? I'm the only cartoon in the lineup. It's not Steve's fault. I tried to take a picture, but I was blurry.
Well, yeah. Speaking of blurry, your cartoon picture had to do, I guess.
Yeah.
Am I excited about this weekend? I am excited about this weekend. Do you know what I'm not excited about?
What?
Getting up early on Saturday and Sunday morning.
Yeah.
That I'm not like thoroughly. I'm not thoroughly thrilled about. But look, I mean, we have to do it for the Europeans. I mean, that's one of it's a disadvantage of living where we live on the West Coast of the United States.
Yeah.
And it'd be the same situation if we lived in like Hawaii. It's like, but then again, we don't live in Hawaii. But I've thought about it. I've actually thought about it.
Living in Hawaii?
We thought about moving to Kauai.
Okay.
Years ago.
That's beautiful.
Yeah, but the problem is that when you're in Hawaii, the best trading is at night, and then have to sleep during the day. And what's the fun of being in Hawaii when you sleep during the day and you want to be around during the day? It's like the most beautiful time to be around. Anyway, it's kind of one of the things that we, living here on the West Coast, we do suffer a little bit from getting up earlier than the average person, but it's really tailored more not to us. It's tailored to people on the rest of the United States and Europe, and to catch people in Asia too. So I'm not going to complain, but I will tell you, here's the schedule just so you guys can see the schedule of events. So for Friday, tomorrow, the FACE webinar will kick off a little bit later than normal. But if you see the kickoffs for Saturday and Sunday, they do start early in the morning on Saturday and Sunday. So just keep that in mind as we go through the event. It is not too late to register, guys. Because you gotta grab your seats, and I mean, you need to get registered like ASAP. All right, so click on that registration button right here. Let me go ahead and put this link over in the chat box. Here it is. So you guys have it. All right, and then make sure you guys get registered. It's going to be an amazing event. I'm excited to. I've got a couple of questions for Daniel DiMartino Booth tomorrow. I'm going to help kick off the event tomorrow morning with Dale. But I get to interview Daniel DiMartino Booth, and actually one of our listeners, his name's Leon. He's in our chat room. If you guys don't know the ForexAnalytix chat room, let me just show you guys. This is all of us in the chat room. You can see Amanda. She's chatting up here, and there's me and DK, and this is all of us chatting, early this morning for the last several hours. You can see all the chatting that's going on. There's me, and I was talking about the New Zealand yen, which I'll talk about here in a second. Anyway, one of our longtime guys in our chat room, his name is Leon. Actually, Steve met him in person in New York. He really sharp gentleman. He's been around for a long time, and he had a lot of questions about the Fed and how Daniel DiMartino Booth feels about the Fed and the direction they're going and the debt that we're accumulating based on her experience being with the Federal Reserve for so many years, and now she's a little bit more critical of Jerome Powell. So he had a really good question that I'm gonna throw at her on tomorrow. So that's just just an example of, man, there's like you got to listen to Lynn's views on the dollar. She's awesome. Shy Girl, Mark Dow, Mark. Steve had a chance to talk with him for a while yesterday. I'm sure he'll tell you a little bit about Mark. He's great. I've interviewed him personally before, probably about 6 or 7 years ago on the old Morning Edge webinar that I used to do. But Mark's, if you guys don't know who he is, he's awesome. He's been on CNBC many years. Ashraf, he's going to be there. Chris Weston, as you know, we've done some events together, and he's super sharp person. And everybody's great. So it's going to be an awesome summit. So make sure you guys get registered. It's going to be a big weekend for all of us. Now let's talk a little bit about where we're at with the markets. I actually just closed up the New Zealand yen short. So, if you look at the patterns in play, the New Zealand yen, I just closed that one up, and let me tell you a little reason why, or talk to you guys about why. The New Zealand yen, if you don't recall, the week ahead video from 2 weeks ago, I talked about challenging this big resistance here at 72, and it was a couple days later or a few days later we'd already dipped to 70 and bounced back, and we were near 70 and change, and I'm like, I'm gonna get short some New Zealand yen. because the risk reward is there. And I felt that stocks had peaked anyway. So at the time, so I took the New Zealand yen off. I removed it today because I put on New Zealand dollar exposure yesterday. So, most of you guys know why, because the big double top, but I do feel that the New Zealand yen could continue to go down, but the problem is we're at horizontal support and the 200-day moving average. But then you have to factor the yen into it, and I'm a little worried about the dollar yen, that it's not acting like a normal, like the yen has acted in the past. And we had this false breakdown here. We had the false breakdown here, but I think the risk of the yen, because we keep finding buyers below 104.50, is that the dollar yen could, oops, I didn't want to do that. Hold on. Thinking the dollar yen might be able to rip past the 106 level. And yeah, I mean, dollar yen could go up to 106 and change, and the New Zealand dollar could continue to drop with its double top down towards the 200-day moving average. That can all happen, and maybe the New Zealand yen is unfazed, or maybe the New Zealand yen even goes down. But why take the risk? I just rather remove the yen out of that transaction and just be short the New Zealand dollar from here. So that's for those of you that are wondering why I did what I did with the New Zealand yen and I cut it short early. That's why. So just kind of give you guys a little heads up. I know I normally don't cover cross rates, but I wanted to, just because some of you might have been like, well, Blake, we're getting so close to your target, why are you pulling it off here? And hopefully that explanation helps you out understanding the reasoning why. But since we're here, let's talk a little bit about the Kiwi, since I got to write it down anyway. So here we are, horizontal supports coming into play. You can see all of these, all this support around 65. The one thing about the Kiwi, I have to hand it to the Kiwi over the last several months. It's very militant around the round numbers. We go to 60, 64 cents to 65 cents to 66 cents to 66 cents to 67 cents to 68 cents, back to 67 cents. It's like, here we are, almost back to 65 cents. It's going to be key support here. And then we break 65 cents. We're going to 64 cents. And which I'm targeting anyway, because that's the double top. But you can see everything's just by round numbers, and it's good because it makes it predictable. But that means that today 65 cents is going to be resistance or support, excuse me. You can see all that horizontal support will come down right through there ish. And resistance is any move back up to 66 cents. So, and we're bearish. Like I said, very respectful of the round numbers, and it has been for months. And if you go back and look at all the bias charts that we've done, you can see all that. Sanse asks, am I long the US dollar Mexican and the US dollar Canadian? Dude, I've been long the dollar CAD for the last 2 weeks, and I've been scalping in and out of the peso yesterday, and shorting the hell out of the euro for the last couple of days. But usually it's been in and out, more of it, that type of thing. All the people in the chat room know. Okay, let's go to the euro. So speaking of the euro, yeah, if you guys have been listening here for the last, couple of weeks, how I've been waiting for the euro to roll over. Now we're getting towards that 116 or 115 level. That again, I'm going to say again, I don't know how far we're going to go. I always thought we're going down to 116, maybe even down to 115. Could even get down towards 114 and change. But this is all dependent on equities. And you know what? I am a little worried about equities right now. If you don't know why I'm not worried about equities, or I'm a little worried about equities, I'll tell you. And it's not just everything else that I've been pointing out. I'm a little worried about risk appetite, especially going into this weekend. politics aside, this Breonna Taylor thing is a little bit concerning to me. And I'm not going to talk about the situation and why you may be for or against what happened. That doesn't matter. The problem is the social unrest it may create over the weekend. I think we need to pay very close attention to how the market sees social unrest because of what has happened in Kentucky the last 24 hours. If we start to see rioting percolate over the next 24 48 hours, it could really weigh on risk sentiment. And I was telling everybody that yesterday. I'm like, this ruling in Kentucky is not going to be good for risk. And so that to me, the reason why I'm talking about this is because the distance that the euro travels to the downside is more, correlated to the downside in risk appetite. If the S&P goes from 3,200 to 2,900, the euro is going to go from where we're currently at to 114. If the S&P goes to 3,100 to the 200-day moving average, the euro dollar may only make it to 115 and change. I'm giving you rough estimates, but it's the same thing I said yesterday. So just, little heads up. Now, one of the things, I'm so irritated. I took my son to soccer last night, in Asia. And I was sitting there walking, and walking and jogging my, 3-4 miles around this park over and over and over again, since I feel like I'm a hamster ball. I'm in a hamster ball when I'm at the practice. Anyway, I was sitting there and I have an offer. I still have an offer to sell the euro at 116.85. Stupid pair got up to 116.79, and I'm sitting there right there looking at my phone, and I'm like, man, I should just adjust my order and hit the bid. And then I'm like, nah, I'm just going to leave it in and just keep walking and listen to music. And of course, it rolls over like 20 pips right after I was done. It literally went from 79 to 62. Half an hour later, I was like, I'm so irritated. But I do think that any rally now back towards 117 is going to find sellers. So you got to say 117. We're bearish. Next stop for the euro. Again, I was just drawing this just so you guys can see it. All right, the 618 retracement. Shoot, I didn't want to do that. 618 retracement comes in right here at 115. All right, it's actually 114.98, but wait. That's the 618. So the 50% retracement is going to come in at 115.90. So let's write down 116. Okay, that should be support today if we get down there. Cable. The cable's really holding the 200-day moving average. I shorted this twice yesterday. Both times up here in I shorted up here twice in the 50s or 50s and 60s and covered it for like 10 pips. And but I keep shorting it up here. But I do think that, and you can see this red line right here, this is previous support, right? So I'm going to say while we're below 128, you got to be really careful of being bullish, roughly. I am still bearish the cable, but this is the 200-day moving average that continues to support. Okay.
Blake, sorry to interrupt. We have jobless claims in about 20 seconds.
Screw jobless claims. Okay.
Who cares?
Yeah, who cares?
People can be jobless as much as they want.
Jobs, schmobs.
Yeah.
Thank you guys. I'm sorry. I'm a little tired today. I'm getting carried away with stuff. This is Data Flash. By the way, this comes with your ForexAnalytix subscription. Here's Bloomberg, just so you guys can see a Bloomberg system, how fast that the data. Crap, I just missed it. It already came out. Where did I just miss it? Oh, it just came out here. It actually came out here quicker than it did on Bloomberg, because we only had those three lit up right there, the Mexican data. So anyway, little miss on economic data. And man, data flash was faster than Bloomberg. That's amazing. All right. Sorry, did you guys have any comments about the data that came out?
Slightly worse than expected. Really nothing to
Nothing to write home about? Okay.
Yeah.
I think for every print that we get that is far away from whatever was considered normal, the chances that the market will realize that the dream that things can go back to where they were at a push of a button should fade away. Let's see how long it's going to take.
All right. Thank you for your comments. Let me bust through this analysis really quick. Aussie dollar. So Aussie, have you guys seen how important the support is in the Aussie? Do you guys not know where we're at? This is the previous high from 2019, the December, basically the end of the year, beginning of the year. Do you guys remember how big this is? Now that we've come out of this channel, I mean, the risks now for the Aussie coming down and breaking through the support and trading down towards the 200-day moving average is quite high. And that's 68. I mean, you're talking 200 pips from here. All right. So, anyway, yeah, this is really key support, and we're at it right now. So I'm not going to write it down. Well, I am going to write it down. So the big figure is obviously key, but 0.730, we're at it. That's really key. Any resistance, or excuse me, I'm sorry. We're obviously oversold. And this is one thing that really kind of concerns me too. If you have ForexAnalytix, you got the analysis on this earlier, right here. Oh, no, not there. Right here. The 70-30 levels holding for now. Keep in mind there's a major support, blah, 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 blah. But the 4-hour RSI is oversold, and it's very oversold. This is the stochastics, but see how oversold it is? So I'm a little worried about the Aussie getting some sort of snapback rally soon. But at the same time, it may be oversold, but we've been oversolder. So let me say that again. The 4-hour chart has been more oversolder-ish than it is now in the past. So the 4-hour chart and relative strength could get more oversoldedness than we currently are. I'm making up words, guys, and I know I am. So if you're sitting here looking at RSI and you're like, yeah, we're definitely oversold, we're due for a bounce. We can, but relative strength is gotten towards 10 in the past, and actually it would lower than that there. It got lower than that down there, down at those levels. I mean, look, relative strength got to single digit midget. We were down at 4, 5. So yeah, I mean, the Aussie could implode right now. I mean, it could drop 100 pips, and relative strength would probably drop down towards 6. And we could say, oh crap, we've been there before. So don't get too overly excited, like, oh, Aussie's going to bounce, I need to get long. I don't agree with that. I just think if you're short, you just have to be really careful. Right? Okay. Hopefully I got my point across there. Where am I at? Oh, so where's resistance? So resistance on rallies. I mean, hell, who knows? I mean, I guess any bounce back to 70s. I think if anybody who's long, if for somebody who happens to be long is like, oh my God, if we can just get back to 70 again, I'll be so happy just to get out there. So I think that's going to be your first level of resistance. It is bearish. By the way, the cable's bearish too. It's just where the 200-day moving average just happens to be holding us right now, but the cable's bearish. Okay. Dollar Canadian, it's bullish. The 200, we have an inverted head and shoulder pattern. As you guys know, I'm long dollar CAD. I'm looking for a move to 135 to 136. 200-day moving average comes in right here. 38% retracement comes in at 136.50. 200-day moving average is at 135.20. So we're surpassing the 24% retracement, which yesterday we wrote down as 134 as being resistance. So now the next level resistance for the dollar Canadian, you can see all this previous support through here. That all comes in at 130. Well, that comes in at 135. But we have some spike highs up here at 134.55, 134.58. So 134.50. Next resistance. And look, I have bids below the market trying to add to the dollar Canadian. I've been raising them for the last several days. Because we're just not dipping. The problem with that is, the problem with that too is that if you're short, you can't get out. If you're long, you want in, or if you want to be long, you want in. So you just keep raising bids because you're trying to just get a little dip to get in. But if you're short, you just can't get out of a short. And at some point you start the threshold starts to, get hit. And then, you just start, triggering buy orders because shorts get squeezed. We haven't reached that point yet. So anyway, any dip now to 133, you can see this is the top of the resistance zone, previous resistance zone. That'll be 133.40, 133.50. Any dip down to 133.50, it's going to be bought. All right. Dollar Swiss, or I'm just going down here. Dollar Mex. I did scalp this a couple of times yesterday on the long side. Did really well with it too, and it was very fast. Just in and out, and like, wow, I just made 800 pips. Wow, I just made 1,200 pips. Like super fast, small positions, nothing to like that's going to make me a gazillionaire. But it's this is very, very fast momentum. This is very similar to the dollar Canadian. There's nowhere to get out. You don't, if you're short, you can't get out. And if you want to be long, you can't buy it because it just keeps holding and it's not dipping. That's a problem, right? So now, you have to find, dips like this to 22.20, 161% extension, 22.64. 22. I'm sorry. I got to continue. I got to hurry up here. This is bullish because we're outside of that. We're outside of the channel that has contained us since the peak, COVID peak. Swissy, you notice where we're holding underside of this trend line that comes in at 92.82 now. We have to break above that trend line for me to turn bullish, but dips to 92 should now find support. Dollar yen, I'm going to do this quickly. Dollar yen, we're at the 50% retracement, 618 previous support. Spike high right there. That all comes in at 105.80. That should be really good resistance today. I might actually short the dollar yen should we get up there, just to be, because if you look at this trend line from the previous triangle, it's pretty limited or manageable risk from here. It may be wrong, but it could easily just break through. But it's a good risk reward from up there. Damn, dollar max won't stop. Support should be at 105.15 now. Dollar index breaking up. Sorry, Steve, Stelios, I'm trying to move fast. Previous
Inexcusable,
support,
mate.
I'm
kidding, of course.
Is resistance. We are bullish now. Whoops, not bearish, bullish. Dips to 94 should be very well supported. 94.60. If we break above 94.60, we're going to 95.60. Right? There's an open air from here to here. If you guys don't know, we talk a lot about this every day. For those of you that normally listen in, so it's open air between here and there. And remember, RSI has definitely been more overboughtness in the past. It's been overboughter in the past. Okay, so US dollar, Norwegian krona has just blown up. I mean, you know, it's funny. I was reading a JP Morgan piece on this just like from 2 weeks ago. They're like, we see no evidence that we're going to break above 920. And then just everybody got steamrolled. Same as
here's the evidence.
yeah, same as dollar is the dollar Mexican peso. I mean, it's you can't get out. If you're short, you can't get out. You're screwed. Now we're at a 261% extension. We should have resistance here at 960, but I would say any dip now to, God, I don't know. I mean, any dip to 940. Well, 940, if you recall, is a 200-day moving average, right? So it's now 950. So I'm going to go with 950. It's going to be support. So that 50-day moving average should offer you support now. 960 is resistance. It is bullish. I know we could blow right through that too. I'm just, you know, noting that's where we're at now. Gold. I want to buy gold. I don't know where I want to buy gold, but you know, we've been talking about the 618 comes in at 18 and a quarter. So that's, I know Stelios has got his hot hands on some silver, so I'll talk about that. But we're bearish gold right now while we're below 1900. And that is going to be key resistance. And as long as we're below 1900, you have to be bearish near term. Now, I do think gold is a buy at some point. I just don't know where to buy it. You know, whether it's 1750, 1800, you know, 1680, I don't know. I'm a buyer somewhere down here. I just don't know where yet. S&P, last but not least. Guys, if you haven't signed up for the Steve, actually, you know what? And Stelios, could you tell the folks a little bit? Oh, look at the S&P. We're going down to 3,100. We are breaking new lows. I mean, look, this is A, B, C, D, 200-day moving average, comes down here. The market's letting out some, and remember, we got some social unrest here in the United States that might percolate over the weekend. So people are like, I'm going to get ahead of that. So I don't know if you're, you know, short, you should probably stay short, right? I don't know who would be buying here.
Mainstream economists have actually managed to turn typhoons and earthquakes to GDP creating events. I'm pretty sure that soon enough they'll find a way to spin social unrest as something positive for the economy.
Be today.
No, I'm just kidding. I mean, I'm half kidding. Obviously, yes, it's obviously not going to be today.
Yeah, I mean, look, we're gonna have to. We have a lot of infrastructure respending to do, or spending to do going into 2022, 2021, but that has nothing to do with right now. 3250 is resistance, and there.
I have to say, if you think that this is a major unrest, wait until there's a contested election.
Oh, it's going to get, I mean, I don't know why you'd want to be long equities ahead of this election, because you're right. It's going to be, I mean, I've got guns, I've got ammo, and I'm going to be hunkered down in my house for a month. I mean, that's just, you know, I think a lot of us that live in suburban areas are going to be that way here in the United States. It's going to be contested on both sides. It doesn't matter. It doesn't matter who wins. You know, far left or far right, they're both going to be up in arms. So it doesn't really matter. It doesn't matter who wins. If it's contested, it's too divisive right now in the United States. So, you know, there's going to be social unrest all over the place. So that's my prediction, as scary as it is. So I'll go to Costco. I'll load up on a month and a half worth of crap, and I'll just sit in my house.
We'll still do face, though.
and I'll pick off anybody that comes to my front door. No, I'm joking about all that. I'm being a little sarcastic.
Blake is going to be posing on face. Give me 1 second, and then you're going to hear 2 shots. Somebody was on my lawn.
No. And all jokes aside, though, I think we have to prepare for some social unrest. Really, I mean, most people it isn't going to affect them. But if you're in some of the major cities, I think you have to be a little careful. I do. And I think the risk is that, it does percolate a little bit going into this election. Like I said, I'm not fear mongering. I'm totally joking about I'm going to go to Costco and sit in my house for a month. I'm joking about all that. But I do think we do have to keep.
I'm concerned.
And it is going to be a concern for the markets going into this. And like I said, I am completely honest about saying, not honest. I'm completely not joking about saying, I don't know why you'd want to be long equities going into this election. I don't know why. What good is going to happen in the next 30 to 60 days?
Well, Blake, it's funny you should mention that. Trump actually spoke about the elections earlier today or late yesterday, and he said that he has a problem with the ballots, the mail-in ballots, and he says you get rid of that, and then if I lose, you're going to have a very peaceful transfer of power. But if you keep them, then he didn't actually say the same. So it's like what are you going to do with them?
For you, look, like I said, it's not going to be pretty, and it's going to be messy, and we have to be prepared for it. And we have to. What do you always do? Prepare for the worst, hope for the best. I want to prepare for the worst. And I think by doing that, being precautious or, in the markets it makes sense, so again, I don't see any reason to be buying risk right now. I'm just putting it that way. All right. Anyway, I'm going to leave it with you guys, but let me also just put this out there for you. I know I've mentioned this, but I'm going to put a link to this tweet. Guys, we are giving away 3 months free to 3 lucky winners. 3 winners are winning 3 months of ForexAnalytix subscriptions. But we have our pricing offer. So, obviously take advantage of the price, but if you win, we'll tack on 3 more months to your, to your subscription, but also you get merchandise too. We'll send you a t-shirt, mug. I mean, I'm telling you, anybody that has the mouse pad will tell you it's the thickest and nicest mouse pad on the face of the planet. So you guys will send those to you as well, but all you have to do, you don't have to enter, or you don't have to buy anything to win. Just retweet that and then also respond to this tweet. Okay. All right, guys, I'm going to leave it to you. Have a great one. Thanks everybody for tuning in. And good luck, everybody.
Thank you, Blake.
Good hunting, buddy.
Thanks, guys.
Hello, guys.
Hi, Stel.
So
Hi,
we're
Steve.
getting closer. One more day, and we'll have the summit tomorrow. I'm very, very excited. And so
where are we going to be? Jackson Hole?
Where are
Davos?
we going to be? Yeah, somewhere there. Maybe next year. So what did we have overnight? A couple of little things to talk about data-wise. The SNB kept rates unchanged. They didn't say much, although they did say they're going to start publishing details about their currency interventions. I don't want to say manipulations, just interventions. And we also had the Norges Bank, who kept rates at 0. And they were slightly more dovish than expected because Norway inflation had gone down to pretty much 0 with COVID. And now it's back very close to 2%, which is their target. And they kind of played that down. They said, look, yes, inflation is rising, but there's a lot of uncertainty. Plus, our currency has appreciated recently, so that might balance it out. Funny, they don't actually mention that when the currency depreciates. So when it
it's not a problem when it depreciates.
15% during COVID, but it's okay. So they're a little bit more dovish than expected. That's why the kroner is selling off a little bit. Obviously, it's selling off because the dollar is also gaining, but. That's what they said. And okay, we covered the US data. I mean, what else to say? Risk and equities, they just feel like they're in a sell the rally mode now. And I I maintain my view that I think we're going to see a continued leg lower, probably going into the elections. Will there be a specific trigger for us to get a lot lower or to get lower than from here? I don't know, but I think, 2,700, 27 to 2,800 in the S&P is very doable. And I know it sounds crazy sometimes to say that, but or people think you're mad, but I think it's coming. And remember, what was it, 5 days ago, 6 days ago, silver was trading quite well, and I said, look, I've taken off almost all my position. I'm waiting for 21 to 22 to start getting long again. Well, I got a quarter of position on. I'm starting very slowly. I got triggered at 21.85 this morning, and I want to start building a position again. I don't recommend people follow what I'm doing because I'm trading unleveraged, and I have effectively no stop on this because I have my fundamental view is that this is going a lot higher. My previous trade, for people who have been following, I got long at an average of about 15. Was nearly 2 years. It was doing nothing. I was down about 15% when COVID hit, and then I waited. Because I really believe in this position, and I got rid of it at an average of around 24. So, 15 to 24, I'll take that even over 2 years. And this is the way I'm going to play it again. And, I'm doing ETFs, I'm doing physical as well. I'm doing a bit of everything. And I want to start loading up a little bit. Very
nice
slowly,
position
though.
trading, bro.
Thank you.
I mean, you can't be perfect, but I mean, you're catching the major swings. You're not buying the low. You're not selling the high. But you know what, that Pinkertism, right? Don't expect perfection at the crap table.
Exactly. So that's my, that's my view on that. We could see 19, within a few days in silver. I'm not saying it's not possible, but if that happens, you can be sure I'm getting some more in, and
that's going to be amazing. If we get 19, it's what they say. Yeah. It's what they say, a gift horse.
How much over spot is cash for you guys? Have you looked at it lately? How much are?
Oh, you mean physical?
Remember, if you're buying physical, because at the COVID low, even though we were at $11, people were paying 14, 15, $3-4 over spot, which I've never seen before.
Yeah, that was the case. I haven't actually seen now. I didn't buy any physical. Now I got
ETFs?
hit on. I'm trading ETFs and also XAG USD basically from a platform. So it's but I'm guessing physical is going to have a premium. Obviously not when it's I don't think that it's going to be as big as during COVID times now, but there's going to be a premium. I'm going to check.
Yeah, there's still going to be a premium.
Yeah, because, 50 cents, 50 cents is normal. But not exactly. $4,
Yeah. Especially not when the price is at $14, $15.
Yeah, you're paying 40% VIG, man. It's like the Godfather's silver coins.
Exactly.
All right.
Anyway, so that's my views, and I'm just waiting, and I want to see what happens going into the election. But because this is what matters now. That's the main event.
Indeed, and everything that surrounds that.
Yes.
Totally.
Yes. Okay. Well, you have 5 minutes, 6 minutes, Steve. So I don't know if you want to cover something.
Yeah, magnificent. By the way, there was somebody that asked. So it's actually a valid question. Yes. Today there is going to be a regular face webinar. The
tomorrow.
Tomorrow. The first hour of the show of the event has been named as a face webinar. It's not going to be exactly the same, so it's not that we're going to talk about the same things that we're going to talk in tomorrow's face. So you can join tomorrow's webinar regularly. It's a few hours before the event begins. So just to answer that one. Dale, any requests from your side?
I'm looking US 30. There's, asking about the Dow. I'm looking for questions about some people cheerleading the MEX.
First of all, the MEX has exploded higher.
Yeah.
First of all, if we want to talk about indices, I'm going to focus once again here in the Nasdaq. The Nasdaq has finally sliced through the previous area of support. So now the next area of support we're looking at is roughly at 10,400 and 50. If you remember, our leading indicator in this case was this chart, which is the fangs. Once that broke down, it was more than clear that that was a bad omen for people that wanted to persist being long, because we knew that the market was being pulled higher near the end, almost exclusively by 6-7 specific stocks, 5 of which were the fangs.
Steve, remember that chart you were showing with the extreme overvaluation of the fangs compared to, what was it, the S&P? And it was a
the Nasdaq to S&P
chart.
The Nasdaq to S&P ratio, you mean?
Yeah, that was it.
Yeah, absolutely.
And that wasn't sustainable. I bet it came in quite a bit.
Here it is. Consolidating, actually. That thick yellow line was the all-time high from the 2000 bubble. Yeah.
Wow.
Exactly.
Looks like a head and shoulders developing there.
Might be some type of a top information here, so it's definitely worth noting. Yes, it can prove to be a head and shoulders, but for that to be confirmed, we would obviously need to see a break below, let's say roughly this is the neckline here. But yeah, it's a good point. We hadn't visited this chart for quite some time, so it's a good point. Now, having to do with the S&P, 3185 is the 61.8% fib of the last leg higher, so that's worth noting. People that asked about the Dow Jones is also depreciating so far in a rather orderly manner within this channel. So, am I convinced that this is the beginning of something much, much, much larger? No, I'm not convinced. The VIX has found support at 25. That's quite important. And we're currently testing a soft resistance area in the VIX. I think above 30, we can actually explode higher for a move towards 45.
Yeah, it looks like a triangle. And I heard on CNBC that the VIX hasn't been performing because there's been extreme selling of calls, which has dampened the VIX performance.
Dampened the effect, yeah.
Yeah, but it looks pretty good. I mean, it looks like it's going to come out of here.
It still looks like, from a risk-reward perspective, in the short term, the long side, can actually produce some really nice profits. And if the speculation that there has been a lot of VIX calling is true, you do understand that that might temporarily dampen the effect, but it's going to act like fuel to the fire in case we have an explosive move higher, because all these people are going to be, destroyed, the call sellers. So that's also something to consider. Now, another move worth mentioning, since we don't have a lot of time, is the explosive move in natural gas. Natural gas, if you remember, we were talking about it yesterday, in which case I said that, listen, it has breached through the 205 area, but the closer we get to 150, the better the risk reward for a long position. I specifically said that I don't believe it's going to be easy for natural gas to actually, break through that area. But yesterday's candlestick, I mean, massive is not even the word to describe this. We exploded from 1.8 to almost $2.2. So we're talking about a massive, massive move higher yesterday. And I'm pretty sure that now that everybody that was long or was trying to get long near the 205 area has been kicked out of the market, with that last big sell-off that we had the day before yesterday, I'm pretty sure that there is a very good chance that we're going to resume the upside now. I still don't have any position, after having that position higher. I haven't established a new one, but if we see an orderly pullback after this explosive move higher back towards the 205 area, and it's, I'll repeat again, an orderly pullback towards that area, I'm going to be very, very tempted to actually, buy at least part of a position once again, at least start with a quarter and, take it from there. So, having to do with silver, I totally agree. Next downside area of support is 21. Personally, I'm getting very, very close to the level that I'm going to start buying myself some physical silver, and I couldn't care less. Even if I'm months out of the money, I couldn't care less. I think it's after seeing this explosive move higher, I think that this market has, in essence, broken out. So I feel very comfortable holding silver at these levels. Who do we have today? Yeah, I heard the guitar.
We have Brian Shannon.
Okay.
Brian's in Wikipedia. He has a very well-read book. It's called the Technical Analysis Using Multiple Time Frames. It's a bestseller. So I'm appreciative Brian would come in and spend some time in our community today. So have you wrapped it, Steve? I'll get Brian set up.
Absolutely. Get Brian set up, and we'll be back tomorrow twice. So people that can't get enough will get a double dose.
What do you mean? We're going to have regular time and then later time?
Yes.
Oh, gosh. Okay. Let's see here.
Don't worry. Tomorrow you don't have much work because tomorrow the schedule is... Tomorrow, the schedule is that we have Di Martino, that's going to be Blake. We have Mark Yusko, that's going to be done by Justine Underhill. Same with Tracy.
Oh, okay.
Justine is going to interview Mark and Tracy.
Okay.
For those of you that don't know Justine was has been in actually many media outlets. She was at Yahoo Finance, she was at Real Vision. Prior to that, I think she was covering the Fed. She's really good at what she does.
Okay. All right. So, Brian, waiting to hear your voice.
Yeah, I'm here.
Hey, Brian.
Good morning.
Very nice to meet you, Brian.
You too. Thanks for having me on.
Yeah, I went to your website and I've read about you, and your book has gotten resounding reviews. Are you in your, how many editions have you gone? I believe it was published in 2008.
There hasn't been different editions, but reprinting. So I order them. It's a self-published book, and I order them in chunks, and then just send them into Amazon when they're getting low on inventory. It's pretty convenient how they do it these days.
Okay. Did you want to share your screen? Have you used Zoom before?
I have used, of course, I have used it before. I wasn't sure, so let me just pull up a screen here. Give me a moment, and then I will definitely share a screen, and we will bounce around on some charts.
Yeah, and it's a great question because talking about, and I'd like to focus on what you write about, multiple time frames, because I think a lot of people, I'm a big believer in using a telescope and a microscope, which is
exactly well put. I often refer to that microscope, and now we're zooming in at 12 times power and that sort of thing. So
right.
We're right on the same page there. Let me just close a couple of these windows because they're just all over the screen, and try to make it nice, clean, so we can get this going. Let me see if I can get this to work properly. And
yeah, it's a green box, share screen.
Share screen. And there, I think that should get the right one. So you see the SPY there, and then okay, great.
Okay, so before we get to the charts, even though I've read a little bit about your background, Brian, maybe you could tell us a little bit about your journey. I know you're at different brokerage houses early on, and what were you doing? You bought your first stock at 13, which is the same time I did with my bar mitzvah money.
Nice.
You did it. You had to work for it. They just gave it to me for going through a religious ceremony. So yeah, you had an interest in it with your dad from, before you could even drive.
Yeah, exactly. And it's funny because it was a driving related stock. So yeah, I was a pretty hard worker as a kid. I would caddy, I would do newspaper routes, rake leaves, all that sort of stuff.
Like Bobby Axelrod.
Yeah, exactly. And then I used to watch the Wall Street Week with my dad,
I
just
love that
because,
show.
just to hang out with my dad on a Friday night because that's what he was doing. So I got interested in the market, and then there was a company called LoJack that I had seen on the local news as I was growing up in the Northeast, Boston area, and it was known as the car theft capital of the world back then. So LoJack decided to give these trackers to the state police to help, spur sales of the LoJack device. Anyways, I said to my dad, "Hey, this sounds cool." We bought, I had $500. He said, "We'll buy 1,000 shares," and it was $5. So he gave me, buying power, another 4,500. So kind of like your bar mitzvah, I didn't really earn all the money. But he didn't give it to me either. He just basically gave me 10-to-1 leverage. I had no idea that's what it meant.
Right.
So with my $500, I controlled 1,000 shares of this $5 stock, and literally bought it at 5 even. And the stock within 3 months went to $10 a share. So I said, "Hey, Dad, can we sell it?" He said, "Sure." For no other reason than it doubled. Today I probably would hold it to $5.85 on partial. And
Yeah.
anyways, so I made $5,000 as a 13-year-old.
There's I cut my teeth in the business on the CME floor, and there's a superstition. Doesn't look like it affected you, but if your first trade is a winner, that's bad luck. A lot
I
of guys on
agree,
the
it is.
mark, huh?
I see that happen to people all the time.
Yeah.
Fortunately, I really didn't do much after that for a while.
You
And then
avoided the curse of the first winner, right?
I guess so. Yeah, somehow I got through luck, just through
Yeah.
luck. Anyways, so after college, I was always kept interested in the market, did some small things along the way. And then, graduated in 91. I went on to go be a retail broker at Lehman Brothers in Boston, and realized that, this is a glorified telemarketing position. This isn't
Right.
trading. It's not what I thought it was, truthfully.
Yeah,
So kind of naive on my.
your manager dropped a Coles directory on your desk and said, today's a good day to call names
Exactly.
that start with
We had
B.
these net worth cards or something, but yeah, so
Yeah.
300 dials a day and 10 leads, and
Yeah.
that whole thing. So I did that for about 2 years, moved out to Denver, and then had saved up a little bit of money. And they used to advertise in the back of the Investors Business Daily for a company called Generic Trading that said, their whole pitch was basically, we'll give you 20 to 1 leverage, minimum $25,000 account to open. So I scraped the money together. It was completely irresponsible to, my first son had just been born, and I had no other source of income. So here I go with my $25,000. I quit my brokerage job with insurance and steady paycheck, and didn't really consider it as a risk. It was kind of crazy. But the great news is that I had always had a real strong appreciation for risk management, and I wasn't making big money, but I was making money every month doing that, and then decided
You're grinding it out.
I was grinding it big time. I would cut my losers, and I wasn't making much money, but I was making money. So
You know how long it takes people to get there, to know that really the best traders do grind it out, that they consider it a great year, up 30%, where the little guy is trying to turn 10 into 40 or 50 to change their life, swing for the fences and strike out. I've been that batter before.
I think we've all have been there. I mean, I've tried. So I then opened a day trading office in Denver to kind of give me an extra, to lower my commission cost and to give me a little extra income on the side. And then I got careless with my trading because I had another source of income. So I kind of, was swinging for the fences a little bit more, realized that wasn't working. So, back and forth, all the stuff that everyone does. So I basically then, did a stint at a company called MarketWise. I was there for a number of years, headed up their education department. Ran a proprietary trading department as well, which was kind of interesting. I inherited that, and it was funny. There were, I think, 26 traders, and I was maybe 24, 25 years old, and I was given the proprietary trading department, and my boss said, "Hey, Brian, he called me. He was out of town. It was the first day that I, had this new position, and he says, 'What do you think?' I said, well, and I thought I was just talking off the cuff. He said, I could probably get rid of half of these guys, because I just don't see how it's going to be, how I can put all the time into all of them. I said about half of them, I think might be able to make it, but the other half to go. So he said, okay, well, why don't you do that? And I go, do what? You just fire them today. I've never fired anyone in my life. I've never been fired. I've never fired anyone. I don't know what to do.
Yeah.
So I had to fire 13 people all at once, which was a strange thing, and they all thanked me for it. I guess I did a good job of it. But anyway, so since then I've been trading full time, and I started Alpha Trends when MarketWise dissolved. That was 15 years ago, and just kind of started as a hobby to continue to write each day. And the audience just built and built and built. And then Howard Lindzen from StockTwits approached me and said, hey, Brian, do you want to turn on a subscription product? You don't have to do anything other than do your work. I said, fantastic, let's do it. So I've been doing that for, I guess, close to 10 years. And I, trade every day as well. So that's kind of where, the whole background of that goes.
Okay. All right. Well, let's get to what you're known for, trading in using technical analysis on multiple time frames. So we're starting out here looking at the daily time frame on SPY. Are these VWAP lines? What kind of lines do you have here? That especially the one we're approaching right here.
Exactly. So here we've got. I'm sorry if I just spoke over there a little bit.
That's okay.
We've got a 50-day moving average, and I like to put that on there because a lot of people look at it, and oftentimes it's an inflection point where you get a bounce.
Yeah.
But a lot of people think that that's going to be the low because it bounced there. To me, they're all just people say, hey, there's support at the 50-day moving average. To me, it's it's a level of interest where we'll look at it's a cue to look at shorter term time frames. So, for instance, when we were there on the September 11th, when we look at September 11th, there was really no evidence of real buying and sideways activity in there. We got a bounce, but it rallied right up to the month-to-date volume-weighted average pricing. Let's go back to the daily before I get too far ahead. So, what in 2003, I was using Realtic software. And I stumbled into the volume-weighted average price. And the way the volume-weighted average price worked back then was I would pick a starting point, let's say the low, and I would drag a horizontal line straight across. And what would happen was that horizontal line would adjust to the volume-weighted average price. So, for instance, if I put a volume-weighted average price here, what you'll see is that's where the volume-weighted average price for that period of time actually just nailed it. Here. So it would show as a horizontal line, which wasn't very convenient at all. And then I discovered I could look at it by, if I started it 10 days ago, or I could adjust the starting date to, let's say I thought that was, let's say that was at this point, 87 days ago. I could do an 87-day chart, and then I would have the actual volume weighted average price from that low. So just to back it up for your audience a little bit, the volume weighted average price is simply the dollar cost average from any point forward. So from the March low, the volume weighted average price has been rising, and the average price paid for the S&P 500, the SPY, is 297.5-ish. Well, we're well above that, so it really doesn't offer us much value at this point. It's an interesting level, but you can't trade against it. So what I have noticed is that you can start to layer these volume weighted average price levels to look for potential support areas. So once that first volume weighted average price hits, it there's a battle fought there, and then the buyers regain control. So I like to call it a point of control. It's not like the VPOC, volume point of control, but it is where there was a new point of control by the buyers. And then it tests here again. So that's another place where I want to add a volume weighted average price. And this is TC2000 software. They added this at my request, the volume weighted average price, that is, about 6 years ago. So they were kind enough to name it the anchored VWAP by Alpha Trends. So what this tells me here is that we're down now, we're coming here in the pre-market down to that volume weighted average price level. So that tells me here's a level of interest. It doesn't mean that I think it's going to be a low, but we've come down pretty hard. We're getting a little oversold. I hate that word, oversold, but we've also got the potential that maybe 315-ish down in here is another level, because that's
that equality.
It's the measured move, basically. We took that high, it was
right
358.75. This low was 331, so that's 27.5 points basically. That gets us down. Yeah. So you take the 27 off of this high, gets us down to about 315. So I've got two levels of interest below. Now, what I've been talking about and telling people, in particular, I made the point in the NASDAQ, saying that do you want to play guessing games and try to buy at these volume weighted average price levels, because they haven't worked, right? They're often, you get a bounce, and here we're testing this one again. But what's more important is not just blindly buying into what is a perceived low, but instead to wait for the buyers to regain control. So for instance, if we go back to some of these prior pullbacks, and let me do this, I'm just gonna switch the time frame to 195 minutes, so we have twice as many candles. And I wanted to go to the Qs. So when we look at this, what we wanna do is say, after these pullbacks, is where we want to buy. We don't want to buy the pullback because we don't know where the pullback ends. So the way to measure where do the buyers regain control is we put a volume weighted average price from that peak. And what you see here is this is where the buyers regain control after this pullback. And then if we go and add another volume weighted average price off of this pullback peak, what do we see? This is when the average price began to rise once again, telling us that the average short from the peak was losing money. The average long, who was averaging down into it, was making money. So now when we look at these, you can see how well they show us. Now, it's not always going to mean that it's just going to continue higher. Of course, if you bought here, you're going to need a stop maybe below that level, and it wasn't the right play at that time. For this peak, it held. But for this peak now, what do we see? Okay, so we can look at that. Actually, let's go to a 15-minute time frame, or this is a 30-minute time frame. So here's where the sellers, it gapped up, made that all-time high, and then we saw right here perfectly that the sellers regained control. And we knew that not at that point, but as it started to back away. So once it starts to back away from there, I draw another volume weighted average price there. That's still declining. We got above it briefly, but it was still declining. and I like to use the 5-day moving average as my my benchmark. So what we're looking at now, of course, is the sellers are still in control of what I consider the intermediate term time frame. So these are 30-minute candles. And on the daily time frame, we're coming into a potential level where the buyers may regain control. So we want to then switch to shorter and shorter term timeframes. I don't want to buy blindly into this because, I might have thought it was down too much here yesterday, or here, or here, or here. But instead to, wait for the evidence to unfold that maybe we're going to see something like this over the next couple days where it does this and that 5-day moving average comes down, flattens out. So I like to, make it more anticipatory. And then I would put a volume weighted average price off of this low, if it ends up being a low, of course. And I would look for that to start, turning higher, something like that. So
I'm interested in the indicator. You had a few charts back. Most of them have had volume on the bottom, but it was not that.
I was over here and then over here.
There you go.
Oh,
what is that? Yeah.
Oh.
What is it?
Well, here, that's funny. Here's this is, so you can see down here, I've got AT share 4 time frame, and then I've got personal. I just kind of screw around with different things over here. I don't usually show that.
Okay.
So I was building a percentage ATR.
Okay.
Rather than, so this is a percent ATR rather than
Okay.
just a point ATR.
All right. Interesting.
So I screw around.
Busted. You're like a mad scientist, Brian.
We get stuck in the ways that we look at the market, but I think that it's important to always, have an open mind to other techniques and, experiment around and say, is that adding value? And my conclusion basically is I should just do this, which was to just click that off the screen because it really hasn't added any value to my analysis. But it's important to always keep learning, which is why you guys are, having me on your program and introducing, some of these concepts to your audience, which I think is great.
It's intelligence gathering too, Brian. I mean, you have a community. I bet there's times that people in your community point out things to you that you didn't even notice because you only have 2 eyes.
All the time. Yeah. I mean, nobody has all the answers, of course. And that's what, a community and teamwork is all about, is saying we've got more eyeballs to find the opportunities and to question, hey, why that one here now at this point? I never get offended if someone asks me why I think a stock is a buy or a void. It's about explaining a concept, and maybe I'm looking at it incorrectly. I'm okay admitting that. Okay.
All right. So as far as where we're at in this market, technically, what are you seeing? Do you have a long-term bias with VWAPs on maybe weekly and monthlies that this is mainly just a correction here and not the end of the bull market? Is there anything in your work that could give you that message, or is it always a constant reassessing every day and not even thinking about that?
That's a great way to phrase that question, Dale, because again, using multiple time frames, people will say, hey, Brian, are you bullish or bearish? And well, in the short term, I'm bearish. Look, we're going down. Right. There's nothing bullish about this. So of course I'm bearish. But longer term, we're still above, this rising 20, 30, and 40-week moving average. And this looks like a pullback. We're above the average price from that low, and that's still pretty far away. I think we're corrective, but the time frames that I engage on are more along these lines, the 30 and 15 minute. I try to swing trade and listen to the market for what I consider the intermediate term time frame, which for a swing trade, generally, if I'm doing it right, it's 3 to 14, 15 days. And if I'm doing it wrong, it's a day trade. I get stopped out immediately.
Okay.
You know, that sort of thing.
All right. Well, you know what I'd like to do? I'd like to wrap it with, you know, I've interviewed Jack Schwager a few times, and I remember I asked him this question, and I'm going to ask you the same question. I asked him, Jack, what's the most important advice you could give to a trader? And he said, find a trading style that fits your personality. What does Brian Shannon say is one of the most important things a trader can do?
Damn it, Jack Schwager. Uh,
You'll be in the next book, Brian.
I really have to agree with him because, you know, find your style. I always say to people, listen, here's how I'm looking at this trade, but make the idea your own. Know your time frame, know your personality and how you interact with the market. It's very difficult for a newer trader to do that. They just want to copy trades and say, hey, well, this guy's supposed to be the expert. He said he's buying this here, and you know, I never want people to copy my trades. I make a ton of mistakes. I get stopped out of a lot of things. It's not about that. If that was what I was trying to do, I would just open up a firm and trade other people's money and not have to deal with it.
Or have a signal service.
Yeah, exactly. And instead, all of my work, I do it through a video so I can explain, listen, here's why we don't trust Apple yet. It's still got a declining 5-day moving average. It's still below these volume weighted average price levels. It's breaking below. And look at how beautifully that volume weighted average price off of the peak in Apple is hit, 3 times. Now we can draw one off of this peak. And we got above it briefly, but we still have that declining 5-day moving average. So stay away. Don't just buy Apple because it's down too much. There's no such thing.
What happens when you go to, say, a dollar store and you buy something that's cheap? It breaks. You bring it home and it breaks. So buying something cheap, it can still break.
Yeah. So back to your question, I do have to, say that would have been my answer, what Jack had said.
Okay.
Because I do it all the time. Let me just switch it up just a little bit, though. And I will say, one of the most common mistakes that I see people make in a bullish environment is chasing a stock, and looking at Apple, and you got to look at a chart and say, who's the knucklehead that buys up here? Not asking where has it come from first. To buy it up there and have a 10% stop, you're most likely going to get hit because it's extended. So not chasing is one of the most important things. And now I'm starting to get some questions from people saying, hey, Brian, should we be shorting these names? Should we be shorting AMD? And I look at it and say, where has it come from? It just dropped 20 points. That's 18% in the last 3 weeks. And you want to short it now? No, cash is a position. You don't get involved after the big moves up or the big moves down. Get these stocks after short-term consolidations where you can control your risk.
Okay, you want me to give you a saying?
Yeah, definitely.
All right. Brian Shannon says, don't chase anything. Let the trades come to you. And if they don't, there'll be another.
Love it. Yeah.
Yeah, I'm giving it to you. All right.
We've all said similar types of things, I think. That,
So why don't you show people your website, and if they're interested in learning your methodology and how to get a hold of you, Brian. And once you go through an interview with me, something happens and it's irreversible. Do you know what it is?
Do I know what it is?
Yeah. Do you know it? Do you have any idea? You're now my trading warrior brother.
That's fantastic. I appreciate that, and I'm honored to be your trading brother warrior.
Yeah. So, and you have to be a warrior, don't you? I mean, if you step up to your trading platform and you hear this in your head, I hope this works. it's time to go back to the drawing board.
I love it. I love
Okay,
it.
so here's where you could find Brian
This
at
is-
alphatrends.net.
The lowest barrier way to look at what I'm doing is, is Twitter, and go to Twitter. Here's my stuff on Twitter. So
Okay.
I put a lot of, stuff out on Twitter that, is free and a lot of times actionable. I talk about these VWAP concepts and, the VWAP handoff here. I was, talking about the potential resistance there Tuesday night, and this was yesterday. We backed right off of that. And then there was a potential support area, put up this SunNova, which is a solar company that I got involved in yesterday. So I think that's the lowest drag way to, take a look at what I'm doing. And then if you want to go further, there's the book, which is on Amazon. I think that you click to it. I guess
Nice.
that's how you do it. I never go to my website, but there it is. Anyways, that's what I've got going on, Dale.
Okay, and I've heard great things about the book, and I tell you what, you're a candidate for our next trading summit, in my opinion, Brian. In fact, Joe Perry made a comment during your interview that he loves your stuff. Maybe you know Joe.
I do know Joe. Yeah, I like Joe.
Yeah,
He's tell him hello.
everyone likes Joe.
Yeah.
So I really appreciate your time today, Brian. I hope that you and your loved ones remain untouched by what's floating around out there, and that you have a great fall trading season, and perhaps we could do this again down the road.
I'd love to. Yeah, anytime. Let me know. Happy to come on and keep doing the great work you guys are doing. Shoot me, you know what? I'll shoot you an email, Dale. I'll get you out a copy of that book.
Oh, wow. I appreciate autographed with an 8x10 glossy too.
Well, maybe not
Love
the
you.
glossy, but
All right. All right. Well, I appreciate that, Brian. And, have a great trading day, rest of the week. And I'm really glad that our paths crossed. I'm grateful to Twitter. I've met a lot of good people like you on Twitter. So thanks again for being here today, Brian.
No doubt. Thanks again. You guys have a good day too.
All right, everyone. That's going to be a wrap. We'll see everyone tomorrow for TGIF and the beginning of the summit. Thank you, everyone, for your attention. Remember, don't just count your pips, count your blessings. We'll see everyone tomorrow. Adios.